We are wrapping up today with none other than freaking Apple. Apple, dapple, grapple, fapple. We got all of it. Trapple, sapple, babble. We got all of Apple today. Trading, what a shocker. Extremely choppy after hours. I warned you with the other videos today. You're going to be expecting some very choppy trading just throughout the day, obviously. We've seen a broad market sell-off today. Now the stock started up, then went down around 5%, back to around neutral right now. So really crazy stuff. Going to be hard to see where it's going to open. We're going to look at these earnings and see what we have. Putting in perspective, obviously, if you look over the last year, Apple's done some good things, up 78%, nearly 79%. So you have to consider that when you're talking about how the price fluctuates based off of these earnings. It's pretty important. So even, if a stock has skyrocketed just too much beyond belief, even good numbers won't save it. So that's something you have to consider. Let's take a look. So Apple puts a GAAP EPS line of $1.68, beats by 27 cents. I like to see that number. I really do. And a revenue line of $111.4 billion, up 21%, is a beat by 8.19 freaking billion. What? That's incredible. There's no freaking way. There's no way. There's got to be a typo in here, right? You'd think that's got to be a typo. Holy crap. That is a ridiculous number. How? How does a company do something like that? I tell you, smacking myself in the face because I can't believe it. I'll tell you how. It's this first line right here. iPhone sales at 65.6 billion versus a 59.8 consensus. The iPhone 12 absolutely freaking rocked it. As I told you it would. I told you you're going to be looking at iPhone, you're going to be looking at wearables, and you're going to be looking at services. So obviously we'll go down those lines as well. iPhone numbers incredible. That's an incredible number there. I don't know. That's there's few things you can say about that besides just be in amazement of how they were able to do such a thing. Mac sitting at 8.67 versus 8.68 billion consensus, right in line. And iPad even outperformed 8.44 versus a 7.61 consensus. Pretty good outperformance there. Wearables, home and accessories sitting at 12.97 versus 11.1 or 11.9. That's $1 billion beat right there. That's crazy. And services, another $1 billion beat, 15.76 versus 14.85. That's an incredible number there. In the services, obviously, they offer quite a bit, from the App Store to Apple TV to obviously Apple Music. They have so many services. Apple Fitness, Apple News. They got it all. So that's where you see that benefit there. Word from the CFO here, Luca Maestri. Our December quarter business performance was fueled by double-digit growth in each product category. Crazy to see that. Which drove all-time revenue records in each of our geographic segments and an all-time high for our installed base of active devices. So active devices, record numbers. I think it's because of these iPhone 12s, I believe, outperforming by a significant margin. These results help us generate a record operating cash flow of $38.8 billion. Holy crap. They also returned $30 billion to shareholders during the quarter as they remain their target of reaching a net cash neutral position over time. That's crazy. That's crazy stuff. So one thing you'll notice, first off, we'll look at this. They obviously re-announced the dividend, which is in line, so there's nothing crazy there. You wouldn't expect. I don't know. I was hoping for a little growth. I'm not going to lie to you. I wouldn't have been upset if they grew just a little bit, you know what I'm saying? But one thing you'll notice about Apple, they're not a company that likes to give out the data too much, okay? They want you to watch or listen to that earnings call. They don't give out too much data. So revenue is up 21%, EPS up 35% to all-time highs. iPhone, wearables, and services set record new revenues. Like I told you, here's the thing. I've been covering Apple for a long time now, baby. Okay? Don't think I don't know the company at this point. Come on now. So really good stuff. So yes, they don't give you a lot of info here as far as that's concerned. Nothing super exciting. So they do give you some financial reports. Obviously, I'll be looking at these for a little little estimate, show you exactly what happened this full year, which I think is incredible. This is just a 3 months ending number here, by the way, which I think is crazy. Net sales from products sitting at $95.6 billion. That compares to $79.1 of last year's quarter. That's a crazy improvement. And services at 15.7 versus 12.7. That is an incredible growth there. Incredible growth. It's really good to see a net income line at $28.7 billion versus $22.2 billion. Good growth in net income over the year. $6 billion more in this quarter than they did previously. That's really good stuff. Again, they said by segment, and you see every one of these as highlighted. Every segment has shown growth, really good. And then we get by category as we saw that difference. iPhone sales last quarter, which the 11 was a massive success for this company too, were at $55.9 billion last quarter. Now it's $65.5. I mean, that's crazy stuff. $10 billion increase in sales there. Mac even saw a growth of $1.5 billion over the last year. We saw iPad show a growth of over $2 billion, nearly $2.5 billion growth. Wearables, even that, $3 billion growth. Services, $3 billion growth. I mean, that's what else do you say there? I don't know how you're able to grow every single segment by double digits. That's a company that knows what they're doing. That's all I can tell you. From a balance sheet perspective, again, it's always been something that I've always been interested in on this company, because I feel like there's been work to be done. We'll see how that balance sheet looks. It's only a 3 months comparison here, so put that into perspective. Total current assets at $154 billion, compares to 3 months ago sitting at $143. So that's pretty nice, a good improvement there. Most of that comes from an increase in accounts receivable. We also see vendor non-trade receivables as well, so it's mostly receivables. And total assets in general at $354 billion versus $323. Again, the balance sheet itself is not weak, because the amount of assets on this company is incredible. But my standpoint of where the balance sheet could show improvement is usually in the liabilities line. As you see here, total current liabilities at 132.5 compared to 105.3 3 months ago. So big jump in terms of accounts payable, which obviously they'll pay off, no doubt. Brings total liabilities to 287.8. That compares to 258.5 of 3 months ago even. So again, you've seen jumps in both assets and liabilities. That's where I can't say concerned, because again, you still look at the stockholder equity sitting at $66.2 billion, has increased from $65.3 billion of 3 months ago. So it's honestly a balance sheet that's, first off, it's loaded. So there's no other way to say it. I mean, this is loaded with cash on it. There's so much. It's a very good balance sheet, but I think they could have some more opportunities in terms of stockholder equity and raising that. I think they really could. But again, the company's got a really good looking balance sheet. It's very strong. Cash position looking really good. Liability line, not incredible. I mean, long-term debt at $100 billion. Again, they can pay that off over time. It's nothing crazy. The things this company's doing, just based off the numbers, is incredible. I can't lie to you. The thing's trading at $2.4 billion market cap, which seems crazy. A PE of 43 isn't actually that high for today's market, if I'm being honest with you, especially what this company's able to do. I can't help put it into perspective enough how it is possible to grow at 21% when you're making over $100 billion in revenue. How is that even possible? You're talking about a growth of $20 billion. How do you grow revenue by $20 billion? I mean, that is a feat that very few companies could ever dream of accomplishing. $20 billion growth in a year? I don't think, if you rationally think how incredible that is, it's crazy to think this company is able to do some really good numbers. And again, I think it's just broad market sell-off why the stock isn't up, because this is an incredible quarter. This is a fantastic quarter. We'll see what the earnings the call has. Maybe that, I don't know what that'll do for it, but I can justify this valuation every day of the week, baby. $500 billion in terms of annualized revenue at a market cap of 2.4. That's honestly not even expensive by any means. This is not an expensive stock at this level. It really isn't. It's a state-of-the-art company that is continuing to show their dominance every single quarter. I mean, I don't know any other way to put it. Sorry to be flabbergasted, but this quarter just blew my socks off. It's incredible. I hope you enjoyed this and you consider buying this thing, because I think in the long run you're gonna love yourself. You're gonna love yourself 5 to 10 years from now. If you've bought this stock here, you're not gonna be upset. Okay, you're gonna give this stock a little kiss, be happy, and you're gonna have a great day.